Hello again, guys. Right, this is a couple of I've attempted to make this video a couple of times because this is, I think, very important, really important to get the right message across. And the message is keep it simple, keep it as simple as possible. And Alex on YouTube inspired this really because he asked me about the RSI Histo Alert, and you know, again, the answer has to be keep it simple. Alex has been following me for a while on YouTube, and I appreciate it, Alex. And in answer to your question, really, I think the best answer I can give you about not keeping trading simple, I've gone off track already slightly, but using the RSI Histo Alert is to use common sense. And I don't mean that rudely. I mean, what I mean is you've got to understand where price is at any particular time of day. In other words, this is the most volatile point in the day, the London Open, most of the time anyway. And then the Asian Open will be the same, and the American session will be the same too. And then, as you can see, just as clear as the nose on your face, there is no momentum in this market now. This is phase 4 of a reversal long, an H1 reversal long. We're on the M5 chart, and this is just the accumulation phase. Now they can take it up and down, up and down, up and down, but you want to be entering the trade where you get the momentum in the market. And the guy who invented this RSI Histo did a good job. It's incredible. 20 levels work for whatever reason. And so getting back to the point about Alex, you've got the history on your charts here. You know when you should be trading. So, you know, I talk about a bust and break, or bust up, pull back, break and close. That's the volatile time of the market. We've also got a M5 reversal here, there, with that candle there, coinciding with the break and bust. If you were to say, make your own rules, sit down, say, I'm going to trade the busy time of the market, I'm going to trade when that 20 level is broken, whether it's below, or whether the bust has been below or a change of colour or not, I'm just going to wait for the busiest time of market, I'm going to trade with the trend, and I'm going to enter with the bust and break and close. Now we've got stripped out charts here, because I want you guys that get getting bogged down with the minutiae, whatever, of drawing all the levels and then making sure all the time frames agree and all that stuff that I understand like the back of my hand now. Forget it all. Just have a few levels on the charts, these 50 levels. Look how the price has respected them. When that triggered here, you got the reversal. Where's the next level it's going to go to? That 50 level. When it broke that one, look how it respected the next 50 level. The 25 pips, I mean. You know, so 25 pip moves up and down like a yo-yo. See, we're getting the momentum into the market again now. They've had a little go. If that closed above the 20, you might have to hit it, or you might want to wait for a pullback. You decide. But learn to trade it like it's a computer game. Forget all the other analysis I do if it confuses you. Just get that RSI on there. You've got all the data you need in the world. What happened in the last London Open? Oh look, we got a bust, pullback, break and close, confirmation. Well, it was post-London, of course. And then the price has collapsed. All of these lines are 25 pip moves. So in the London session, we got a little bit of momentum moved into the market. We busted down, we pulled back, we broke and closed down here. What happens? Price crashes. Not as fast as some of these other moves, but that there is a 25 pip candle. I can clearly see that. You know, you don't want to be going long against this move and it's clearly telling you on this M5 chart I do not want to be going long. So when you get a confirmation down like this 3 candle reversal here with a big strong red reversal to the downside, what do you want to be doing? Going short. Same here. There's the bust, there's the pullback, there's the break and close, there's the confirmation through a ton of support. What happens? Another 25 pip move, or thereabouts. That candle there I'm talking about, 30 pip move. Okay, so treat is just have a few lines. You know, this template is easy. Sweet spot gold, that's the settings. $500 is the major line, 50 points in other words, and the secondary line is 25 pips, 250 points, whatever you want to call it. And just the histogram, and learn how to use it. Teach yourself, and this isn't just for you, Alex, this is everyone that's struggling with the complexity of what I do. Just pick your moments to trade. Watch the RSI Histo. Watch the reversals. In this instance we got a bust. There was a bit of movement to the long side. Then we got the break and close. But this was such a big move, as you can see. It's pulled back, and then we've had to wait for the continuation. So gold is a beast. You know, don't necessarily have to choose gold just because I'm looking at it, but I just like the way it moves. I haven't traded it for a while. Got Carlos to thank for that from Twitter. So, you know, we're waiting for long opportunities here. And, you know, even this one that I can see, broken close here. We had a pullback. We were just, there was sideways, might have been news on the UK or something like that. That's 9 o'clock there. But it went up. Nothing goes in a straight line. You know, here's another break and close here. There's another break and close there. You know, just treat, and you could not possibly consider going short. If you were in this instance, you must be mad. But then you're always going to get pullbacks, and in this instance here, you would have wanted to go wrong time of day to trade, in my opinion. But never say never. Drop down to the 1 minute. I'll keep that highlighted because we'll probably lose our place. Watch the pullback. There's the big break and close. Another little pullback that would have scared the pants off of most people, I'm sure. 10-15 pip pullback, and then it's continued on down. But teach yourself how to trade a currency pair, any currency pair. All you need to do is treat it like a computer game. This thing doesn't repaint, obviously. I wouldn't use it if it did. It is what you see is what you get on your charts. This is just broken up as it happens. A little bit of momentum in the market there. There's a bit of activity. So always be aware of what your higher time frames are doing, and then consider this as a computer game. Actually, that's interesting. That's just reversed up by the looks of it. That's the lowest low. So I would use this, the 3 candle reversals, and just trade these lines. And don't bother yourself with the H1s and the M30s and all that lot if all you're looking for is 5 or 10 pips or even 25 pips to the levels. In this instance, remember, we're looking at a double top here. We're looking at you know, a rejection twice, maybe even more times on that level. It's quite dangerous to consider it going up. But there I'm getting into sort of experience, screen time. And that's the only way you can learn. You'll come across this and you'll think, oh, go long, and then it'll fail. Because they've attacked the stops. They've faked in the buyers, whatever reason. So learn to understand what the indicator is telling you. This is going up now. we've got a descending trend line, you know, just use, all you've got to do is use common sense and a simple indicator, one indicator and a set of horizontal lines. Okay, now I'm not suggesting if you've been studying my stuff you unlearn it or stop. All I'm trying to do is make people that are struggling realize there's other ways to use a simple method. It couldn't be simpler. Stick to the volatile times of the market, busier times. Don't get caught in these sideways things, because that's where you pay, you know, you give back all your winnings, as it were. Alright, keep it simple, guys. Thanks for watching, and if there's anything that any of my videos confuse you with, just ask. But I'm not sure whether I mentioned this again, Alex. I've only had this on my chart 4 or 5 months, maybe 6 months now. I'm still learning myself, and that's why I can't give you a definitive answer of what I do. I think you've got to apply it to current price action and decide yourself. Don't limit yourself with such strict rules that you're scared to actually press the button. You know, there's a saying, if it looks like a duck, walks like a duck, quacks like a duck, it probably is a duck. So if this is telling you you've got a good trade in place, if your time of day is right, and all your other analysis, whatever you happen to use, whether it's a moving average crossover or whatever, or a Fibonacci or a pivot, then just be comfortable with your own analysis and a super bit of kit. Thanks for watching. Have a great day.